we've talked a lot about what the markets might do if Jay Powell were fired. How would it work out? What would the president try to do? The Federal Reserve Act says, of course, and you've heard this a number of times, that the Fed governors can't be fired except for cause. The Federal Reserve Act says each member holds a term of office for 14 years unless sooner removed for cause by the president. Now, what does for cause mean? That's going to be the key here. It's undefined. Historically, courts have construed it as misconduct, incompetence, or incapacity, but it's never been litigated in terms of the Fed. The Supreme Court now considering those two cases with the National Labor Relations Board and the Merit Systems Protection Board about whether the leaders of those could be fired. There are some similarities, and if that is the case, and we don't know when it's going to actually go before the court, then maybe there's grounds for the president to be able to try to move. If not, then here's the timeline. As Board of Governor chair, Jay Powell's term expires in May of 2026. Getting interviews going this fall, as we've been told, is the likely process. I mean, it's what you would expect. As a Fed governor, though, Jay Powell can stay on until January of 2028. Would he do that? Michael Barr decided to stay on after he resigned as a vice chair for supervision. And then as FOMC chair, the policy-making committee, that's every year. They pick a new chairman, and they always, by tradition, pick the chairman of the Fed. If the president puts somebody else in, then the members of the Open Market Committee could still pick Jay Powell. You don't have to be on the Fed to be chairman of the Open Market Committee. So there's a lot of moving parts here, but the question is, do they all come together enough that the president could get rid of Jay Powell without setting off a market tsunami?